Let's get some business news next. Nearly 2 years since its defaults grabbed headlines, the world's most indebted property developer, China Evergrande, has sought bankruptcy protection in the U.S. Now, this will help the company safeguard its assets in the U.S. as it works on a multi-billion-dollar deal with creditors. Now, a meeting with creditors has been pushed back to later this month to allow them more time to consider a restructuring plan of nearly $32 billion. The bankruptcy filing opens a new chapter in the Evergrande crisis and sent shockwaves to China's key property sector. Let's take a broader look at China's property crisis. So immense is the sector that its influence can be measured on a global scale. Accounting for more than half of new home sales worldwide, it is the largest single asset class with a market value of around $62 trillion. It also accounts for 30% of China's economic output, or GDP. Now, a substantial portion of funding for the China developers comes from credit, and it runs into trillions of dollars. To curb borrowing in the sector, the Central Bank and Housing Ministry introduced a policy known as the Three Red Lines. Now, this was introduced in August 2020, and they refer to the strict debt and cash flow targets on real estate firms, choking off liquidity for the most leveraged developers. The impact was harsh. Chinese developers have reportedly defaulted on more than 140 bonds in 2022, missing payments on a combined $50 billion in domestic and global debt. Now, China's Evergrande Group first defaulted on a dollar bond in December 2021, setting off an initial wave of concern in the property sector. It's the world's most indebted developer, with liabilities of $340 billion. Now, China's largest private developer, Country Garden, has now triggered fresh contagion fears after missing coupon payments. Its total liabilities stand at more than $190 billion. That's half of those of Evergrande. But the developer has more than 3,000 projects all over China, compared to nearly 800 for Evergrande. Now, China's new home prices have been tumbling over the past few months, adding to the woes of these developers who need cash to alleviate the credit crisis. Analysts predict the slowing sales could see more developers defaulting in the coming days, raising risks for China's annual growth target of 5%. Well, to shed more light on how grave the China property crisis really is, we have Tommy Wu, senior China economist at Commerce Bank. He joins us live. Mr. Wu, nice to have you with us. Now, the property slump is not just limited to private developers. China's state-owned builders are also warning of rising losses. Now, we've also got record youth unemployment and retail deflation. How can consumer confidence in the property sector be revived?
Yeah, indeed. I think it will take more efforts to actually restore property market confidence, given what has been going on through the past couple of years or so. So I think, first of all, the authorities need to take more efforts to, for instance, cut mortgage rates or further ease purchase restrictions at the local level to boost housing demand. Secondly, I think it's equally important, or actually more important, is to rescue the property developers, or in the sense that at least providing more of a lifeline to them so that they can continue to complete their homes. And without completing the existing projects, it's hard to restore consumer confidence on housing. So this is very important. And I think also another dimension is we need to see more of a broad-based stimulus more generally. So, for instance, we have seen the PBOC cutting interest rates earlier this week. So I think we need to see more of that so that the market and also consumers in general can actually see that the economy could be on a right track to recover.
Now, it is really hard, however, to ignore the impact of all this property turmoil on the financial sector, especially when the Chinese banks are scheduled to release their earnings next week. What are you expecting?
So I think banking profits were under pressure and will continue to be under pressure in the near term before the economy can actually turn around. Now, first of all, credit demand has been weak because of the soft economic growth, and we've seen that in the new loans data in recent months. And so, obviously, with weak credit demand, it's going to affect banks' revenue and profits. Now, secondly, at this stage of seeing rate cuts and lending rate cuts in particular, that will eat into banks' net profit margins. So I think these two factors are going to affect what we're going to expect for the banking profits that will be released soon.
And are you fearful for contagion fears in the wider Chinese economy, other sectors?
Now, certainly we cannot downplay the risk of contagion because basically we are seeing three key risks in the Chinese economy coming from the real estate sector, and the shadow banking sector, and also the local government sector. Now, if you look carefully, basically all three of them are related to real estate, more or less. So obviously the risk of contagion cannot be downplayed. Now, I think it really depends on how the authorities will come up with more forceful and concrete plans to deal with the problem. So, for instance, if the government can actually step in more forcefully to take care of the first of all the local government debt problem, and then also the shadow banking problems, then now we are leaving with the one major problem, which is the real estate problem. So I would expect the government will step up more in order to really rescue the sector, because this is the key to resolving the whole issue right now.
Indeed. Thank you so much for your thoughts there, Mr. Tommy Wu. He is Senior China Economist at Commerce Bank, and he joins us live from Singapore.